Tuesday, January 28th, 07:29 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Big event occurring tomorrow, United States, a binary event, meaning a scheduled event, not a known event. Federal Reserve meets to vote on the interest rates. We're also very close to the end of the month, the first month of the year. Going to look at the yields, top down, the higher duration to the lower duration. Yields go higher, bonds and notes go inverse. Yields represent interest rates. We're going to see there's a divergency on the monthly. So this is a 20-year chart. Look at this on the top left. It's the high for the past 20 years. In the bottom near the right, the low the past 20 years. This is the 30-year yield. Reflects the longer duration. On the far right, look at this yellow line, the low of last year. Again, we are not at the all-time highs for the past 20 years. And look at this month right here on the candle on the far right. We broke above the high of last year. Yields on the 30-year are trending up. Higher yield, higher interest rate, you earn more income on that bond. We're still below the 2023. So again, right off the bat, remember that. We broke above the high of last year for the 30-year yield. Now we'll look at the 10-year yield. Again, same thing, the chart is 20 years. Each candle represents the month. This is the shorter duration, the 10 year instead of the 30 year. This is the most popular one related to mortgages. Same thing. We broke above the high of last year. You could earn more income buying these today than you could last year. Now we're on the 5 year. We are still inside the range of last year. We haven't taken out the high or low. But for the month, compared to the bottom of last year, we're trending up. Okay, have not taken out. So we got a divergency there. The higher durations versus the lower durations. And look at the 2-year yield. Yes, we took out the high of last month, still way below the highs of the year of last year. So the longer term yields making new highs versus the shorter term ones are not. There's a divergency there. It's been a while since we've seen some stuff like that. Tomorrow, 2 p.m. Eastern Time is the event. Public information. We'll finish this off by looking at the US dollar. The US dollar has a correlation to interest rates, US interest rates. Typically higher interest rates, stronger US dollar. 20 years chart. We already took out the high of last year. So the higher yields, the higher duration, took out the high of last year, as well as the US dollar took out the high of last year. And the other nations, central banks, Western nations, have kept their currencies weak. Pay attention. Both sides offer manipulation. I posted the stock ETFs, the metal ETFs, and the bond ETFs at the bottom of the Patreon video for my Patreon members and their last trading price. Thank you always for spending just a little time with me. That's it for the video. Thank you for watching.